The most interesting news of the day. Well, it's an 80 crore company which is looking to raise close to 6 crore from investors, or in fact, they have raised close to 6 crore from investors to invest in Bitcoin. Well, what does the company do and how much Bitcoin does it own? Let's get in Mahima, who has done all the hard work to get all this data.
Right, so as you rightly mentioned, it's a micro cap. It's hardly a 80 crore company which has raised around 6 odd crores via preferential issue. And in their filing, they've said that they've raised this money to invest in virtual digital assets and mainly in Bitcoins. Now, the company is basically specializing in hardware, networking and digital courses. It has around 150 training centers across India, Nepal as well as Southern Asia, in terms of Southern East of Asia. In terms of its current holding for virtual digital assets, as of 28th May, it is holding around 21 Bitcoins in its portfolio. They've acquired this, these Bitcoins in multiple phases, and the average buying price is around 64 lakh per Bitcoin. The Bitcoin is currently trading at around 92 lakhs. In terms of their approximate value of holding right now, that stands at around 19 odd crores. So it's an interesting story, an 80 crore market cap company raising money to invest in Bitcoins.
It's an 80 crore market cap company which has around 19 crore worth of Bitcoin. Now, viewers do remember that this news bit was covered just to give this information because it was interesting, and this was not any form, in any form, this was not any recommendation to buy or sell the stock.
Well, got that, and very interesting to say the least, because we've seen this as a play, Swami, in the global markets in US also a lot of companies doing that, but largely the first in India for sure. But, there's another very interesting note that's come from Morgan Stanley actually on India's real estate sector. They are largely putting out a fairly positive view on the space. And what would be some of the key interesting picks? My colleague Anushi is joining in with some key highlights as well as top picks from the report. Anushi.
So what we are looking at is in terms of rating changes for a couple of these counters. Morgan Stanley has now upgraded DLF to an overweight from an equal weight earlier. However, they've cut the target price to 900 from 910 earlier. Prestige also, we are looking at an upgrade rating from to overweight from equal weight. While for Godrej Properties, they have downgraded the rating to equal weight from overweight. Now, essentially what they are saying is that they are reintroducing net asset value as a concept, and your pre-sales remains a key factor to consider the future trajectory growth for these counters out there. Now, do note that DLF and Godrej Properties had beat the FY25 guidance in terms of the pre-sales which were there. So the real estate cycle remains intact, but some bit of late cycle in that cycle of growth that we are looking at. They prefer companies with a higher growth profile. That's why they've upgraded DLF, considering the attractive valuation that it has, along with the land bank, which also offers a little bit of margin protection for the company. Prestige, if we see now, FY25 was not a standout year for the business because of delays in a couple of projects. But for FY26, Morgan Stanley expects it to be a standout year in terms of a robust recovery, in terms of where the pre-sales are concerned, seeing a 40% of a growth year. However, for Godrej, now we have seen decent growth for Godrej Properties as well, but they've downgraded the stock, considering that growth may come at the expense of margin and leverage. So that is on the downside that we are looking for Godrej Properties. So overall, for other counters also, Oberoi, Macrotech, they've maintained the rating, but we are just looking changes in terms of their target prices concerned. But overall, pre-sales continues to be the leading indicator for the performance of some of these counters out there.